Welcome back to Teshkid FX for another price prediction update, and in this video I'll be giving you a price prediction update on Quant, whose current price stands at the $123.5 mark, and here on TradingView the market is up by 1.73%. And in this video I want to give you the short-term and the long-term scenarios that I expect to play out, basing my analysis on the Elliot wave structures, the Fibonacci's, and also the key areas of support and resistances. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Quant chart. Quant from the all-time high had been seeing lower prices in this massive ABC corrective structure, which took us back to around the $40.1 mark, and after seeing that low we have been seeing a very nice bounce to the upper side in a movement that has been obeying the Elliot wave structures, and that is better seeing here on the 4-hour chart, where you can see I have this Elliot wave structure in blue, where a wave 5 completed the formation of a higher Elliot wave count 1, and after seeing the formation of a higher Elliot wave count 1, whatever we expect next is a bit of a retracement to the lower side in the formation of a second wave, and I believe that is what we have been seeing over here, making our low at around the $94.4 mark. And after seeing the low in the formation of a second wave, whatever we expect next is an impulsive movement to the upper side in the formation of a wave 3, and I believe that is what will be playing out very soon here on the Quant chart, and sketching out a minimum target area to the upper side in the formation of that wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the Fibonacci's to the low of the second wave. That gives me a minimum target area to the upper side in the formation of that wave 3 at the fib level 1.618, and that is at around the $398.8 mark, and that is the minimum that I would expect that Quant to do in the long-term scenarios, and that is my long-term scenario that I'm expecting to play out. And jumping to the 1-hour chart for further analysis, here on the 1-hour chart you can see after making our low in the formation of that second wave at around the $94.4 mark, we have been seeing a very nice bounce to the upper side in a movement that has been obeying the Elliot wave structures. And if I have my Elliot wave structure, we can have that as the first wave to the upper side, then we have seen the formation of a wave 2, then I believe we're in the formation of that wave 3 before we expect a wave 4, and then continue pushing even higher in the formation of that wave 5 to complete a higher Elliot wave count 1, which is a fractal wave within that higher Elliot wave count 3 to the upper side. And getting a little bit into the details of the formation of this Elliot wave structure, and also show you the key chart patterns that we have information on this chart, we have an inverse head and shoulders pattern over here, and if I draw it out we can have this as the left shoulder of that head and shoulders pattern. Then we have seen the formation of the head, then we have seen the neckline and also the right shoulder, and we saw a bit of a breakout to the upper side. And as we try to have a retest of the neckline of the inverse head and shoulders pattern, you can see we went a little bit deeper into the inverse head and shoulders pattern, and this might be invalidating that breakout to the upper side. And in this movement right here, we also saw the formation of another chart pattern, which is a double top, and we have also seen a breakout to the lower side, because if I draw my chart pattern over here, we can have that as the first top, then we have seen the formation of the neckline and also the second top, and seen a breakout to the lower side. And this is a chart pattern that gives us a breakout to the lower side, having the minimum target area of the breakout as the height between the tops and the neckline, and we can get that height and then place it below the neckline, and that gives me a minimum target area back to around the $117.2 mark, which is a target area that we have fully maximized. And right now we are seeing a bit of a recovery to the upper side, and in that movement to the upper side we have also managed to break above the 20-day MA, and there are chances that we might continue pushing even higher to fully maximize the formation of this wave 3 to the upper side, and sketching out a minimum target area to the upper side in the formation of that wave 3, connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the Fibonacci's to the low of the second wave. That gives me a minimum target area to the upper side in the formation of this wave 3 at the fib level 1.618, and that is at around the $151.2 mark, and that is the minimum that I would expect that wave 3 to the upper side to do before we see a wave 4, and then continue pushing even higher in the formation of that wave 5 to complete a higher Elliot wave count 1 to the upper side. And I also need to prepare you for a more bearish movement here on the Quant chart, and that can only happen in case we continue seeing lower prices and lose the key area of support at around the $110 mark. And if that scenario plays out and we make a new low that is below this low that we have for this second wave, then I'll have to term this movement that we have over here as an ABC corrective structure to complete the formation of that higher Elliott wave count 2 to the lower side. So there are still chances that maybe we have not yet made the low for that higher Elliott wave count 2, and using the Fibonacci's to get a minimum retracement area in the formation of this wave B, which might be playing out over here, having this as the wave A. Assuming this is the wave A, then this might be a wave B, then expect another movement to the lower side in the formation of that wave C to make a new low in the formation of that higher Elliott wave count 2, and getting a minimum retracement area in the formation of this wave B by connecting the Fibonacci's from the high of that wave A to the low of the wave A. That gives me a minimum retracement area between the fib level 0.5 and the fib level 0.618, which perfectly lies between the $161 mark and the $117.5 mark. So in case we have a retracement into that target area, then continue pushing a little to the lower side, there are chances of making a new low in the formation of that higher Elliott wave count 2 before we see that bounce to the upper side in the formation of a wave 3. So let us be prepared for such a movement. Also taking a look at the indicators to see what movements will be supported here on the RSI. On the RSI we are trading at around the 63 mark, meaning we have massive room for us to support any movements to the upper side and also to the lower side. Also taking a look at the MACD. On the MACD we have printed a bearish cross, and we are also seeing a bit of a we have printed a bullish cross, and we are seeing a bit of an increase in the buying momentum, and that would mean maybe higher prices are coming our way. So let's be patient and see how that plays out, and I'll keep you updated.